Good afternoon, everyone, and welcome to Stock Market Today for Monday, June 2nd. It's Alissa Coram here. And we saw some early weakness turn into strength with the NASDAQ leading today. And joining me now to discuss all the key market moments from today's session is my colleague, Justin Nielsen. Hey there, Justin.
Hello there.
What do you
A
have
lot
for us?
better, a lot better end than where we
Oh,
started,
yeah,
right?
absolutely. We've got some interesting stuff to chat about. What do you have for us?
Yeah, you know what? We'll take a look at a few stocks that were looking interesting. WPM, which is Wheaton Precious Metals, that was our stock of the day on IBD today. We'll also take a look at Meta, of course, one of the big mega caps. I do have a position in that. And then we'll round out the discussion with a little bit more of this NRG energy, in this case, with a lot of these utilities still looking strong.
Sounds like a plan, Justin. We'll get to those stocks, but first, let's take a closer look at the major indexes. The Nasdaq today up 0.7%, essentially finishing at session highs here. The S&P 500 up 0.4% today, also reversing higher after early weakness. The Dow finished in slightly positive territory, up about 0.1% by session's close. Same for the Russell 2000 small caps, also up about 0.1%. So the Nasdaq leading the way. And on Friday, we were talking about that very compelling shakeout, and we got an upside reversal today. So things are looking pretty good here. What do you make of it?
Yeah, I mean, can't complain. The market is kind of doing all of the things that you would expect it to do, the things that make it look very, very normal. And it started this whole rally by just checking off box after box. And now we've had a little bit of our shakeout, but how bad was it? I mean, we stayed above the 21-day moving average line on the NASDAQ. We stayed above the 200-day moving average line. We really never came down that hard. Now, granted, you might have had some issues with some individual stocks, but the market itself is just looking very strong. And so, as you mentioned on Friday, the shakeout kind of went to a very normal level. We had that gap up after the long weekend last week, and we shook out right below that, came back strong, finished at the top of the range, almost got it back into positive territory on the S&P 500, but really strong action, then followed it up today with continued strong action. So we were down maybe 0.7%, something like that, at near the open, but quickly rebounded, and it was just kind of steady. You can see that higher lows, higher highs the whole rest of the day, and that's your definition of an uptrend right there. It's also worth mentioning on the daily chart that we have some areas of interest here, because if you look, yep, right there, your eyes are just immediately drawn to that level of resistance that we're getting right up to that level. Look, we crossed it a little bit and then got turned away last week. So now we'll see if we can get above Thursday's high, because that's going to really kind of show that, yeah, this is a market that can get right back up to that 20,000 level.
Exactly. So that resistance area that we're looking at are those highs around 19,200 or so, which is right around where we closed today, just above that level. And then the high from last Thursday, that is 19,389 for those of you listening to the audio version here. Let's also take a look at the S&P 500. Something else, Justin, that you've been pointing out is the fact that this shakeout, pullback, pause over the last couple of weeks has been really helpful for a lot of stocks underneath the surface in terms of shaping up new buy points. Because I think one of the struggles for a lot of investors off of those late April lows was feeling like we powered higher so much faster than a lot of people expected, that meant that stocks became quickly extended. So now perhaps getting a second chance for a lot of stocks, whether it's new buys or even add-on opportunities.
Yeah, absolutely. One of the problems when we had our follow through day on April 22nd was that there were a lot of stocks that just weren't in position. You had your exceptions like Netflix, which I know you bought right, very early. I was a little bit later than you, but I do have a position in it. So there were a lot of those that were set up, a lot of double bottoms, but most stocks were below their 50-day moving average lines, below their 200-day moving average lines. And then as we kind of really ramped up, they quickly got extended. So by the time you started feeling, oh yeah, maybe this market can really power higher, a lot of things were extended, felt out of position, or they were coming up so quickly up their right-hand side. You kind of got this nervous feeling of, okay, we're at resistance levels. do they need a pause? And that's in fact what happened with a lot of these stocks, where you're getting a pause exactly where you want it, and you're getting these nice little handles getting formed on top of cups or even double bottoms. You're testing pivot points. There's a lot of stocks that have come out of double bottoms, and they're just testing the middle of the W's. And so there's a lot of great looking charts out there right now, and that
Mhm.
just makes it so that you feel like I've got the market wins at my back, and I've also got merchandise to choose from, and that's a powerful combination.
It sure is. And so for the S&P 500, we're keeping a close eye on the highs from around 519 at 5968, which is just below that round number of 6,000. So those are where we're looking to the upside as potential levels to watch. Quick thoughts, Justin, on blue chips and small caps. We'll start with the Dow.
Yeah, the Dow, look, that's been struggling. A lot of that has to do with, if you pull up UNH, which is, remember, the Dow Jones Industrial Average is a price weighted index, and when you've got a $600 stock that goes down to 300, losing half its value, yeah, that's gonna leave a mark. So you've got the Dow Jones Industrial Average kind of struggling, and that's one of the problems with a price weighted index. You can sometimes have undue weights, and not to mention it's only 30 stocks.
Right.
Over on the Russell 2000, look, this has also been struggling. It's still below the 200-day moving average line, so it's a little hard for me to get too excited about this area right now because of how decimated it's been. And when you have all of these choices of great looking charts, it's hard to look at something that still looks kind of ugly.
hmm And it's not that all small caps are doing terribly. I think there was even wasn't there a small cap ex US ETF that Scott St. Clair he was looking at that was looking interesting. So maybe outside of the US, whether it's small caps or not, I know we've been focusing on the international space as a source of relative strength here and
Mhm.
there.
And
That's
just
also
as a
something on the radar.
point there, you can pull up VXUS, which
Right.
is this isn't small caps
Yeah.
necessarily, but this is a global, and that had that's been looking great.
It sure has. Okay, well, there's more to chat about before we get to our individual stocks. Let's take a quick look at the 10-year yield. How's the bond market looking lately in your view, Justin?
Well, there have been a lot of things where you're looking at the correlations, not necessarily always matching exactly. But right now, I've been kind of ignoring the 10-year treasury yield, to be honest with you, and focused more on the market.
Yeah.
This just has seemed very noisy to me. And so at the end of the day, my decisions are going to be based off what the market is doing, what my individual stocks are doing. And that's just been a lot more instructive than the topsy turviness that I've been seeing in the bonds.
Yes. Okay. Well, we're going to take a look at one gold miner, but I think it's worth taking a look at GLD and GDX today. Look at gold up 2.7%. We've been following this digestion after the strong move from January to March and very constructive digestion at that. Seems like for those who didn't buy off of the 50-day line, Justin, today giving traders another opportunity to get into gold.
Yeah. And look, Ali, I think you brought up a really good point this morning on IBD Live, because we were talking about how sometimes it's a little hard when you've got a strong market and all of these growth stocks that are looking great. You always think of gold as a little bit more defensive and a little bit more safe haven. So why go with the safe haven when you've got all these choices? But what I thought was interesting today was how gold finished. Uh, Look, when the market was weak and gold was gapping up, it's like, okay, well, maybe this is just a little bit of the counter trend thing going on. But as the market got stronger, gold kept on getting stronger the whole day too. And you saw that with GDX, the gold miners as well. So it was really interesting to me how strong these finished. And they started strong and just got stronger. So even though the market was up today quite a bit, gold was having a great day, and a lot of the individual stocks again had some really compelling looking charts.
Yeah, they sure did. We'll take a look at one shortly, but first we want to take a look at the energy sector. XLE up 1.3%. This has been a lagging area, Justin, by and large. We do know that Chevron and Exxon have big weightings here in the XLE ETF, but oil up big today with the USO ETF up 3.6%. And there are some standouts in this area. Tell us more.
Yeah. So look, when you have a ETF that's up the most, and again, I look at all the sector ETFs. There's 11 of them. I look at both the market cap weighted and the equal weighted, and both the equal cap weighted and market cap weighted actually were pretty high up there for energy. And so that means even taking out
Mhm.
the
Chevron and
big
Exxon.
effect of
Mhm.
Chevron and ExxonMobil, this was still doing very well. And the ETF that I look at there for that equal weight is our RSPG. So that's something you can pull up real quick. And look, the fact is, this is still both of these below their 200-day moving average lines, below their 50-day moving average lines. And so I think it's important that you recognize that sometimes you can have this strength and you don't necessarily need to do anything just based on one day. However, there are some stocks in here that are
Mhm.
looking interesting. And I just wanted to bring up EQT, which I believe is on leaderboard. This has been looking pretty good. So it's something that they were actually considering maybe even adding to the position. This is very different than the ETF, the way this looks. So
Yeah.
be cognizant. Just because a group is bad, sometimes there can be pockets within there that can be very strong. And I think
Mhm.
that's something that we're seeing in a number of cases here on the oil side.
Yeah, and that's why I like what a lot of the team does is we don't just do a top-down approach or just do a bottom-up approach. There's a whole bunch of different ways that we're slicing and dicing, looking at the major indexes, the sectors, and then screening for leading stocks, regardless of what sector they're in. And so you do get that quality filtering through. So like EQT here, there are some interesting aspects to it. Leaderboard obviously likes the look of it, and it's clearing an area here, taking a step back to the weekly chart. I will adjust the look of it here. A very strong uptrend, Justin, for this stock over the last almost year now.
Yeah. And again,
Yeah.
very different from the XLE or even the RSPG. So there are a number of these stocks that are just doing something different.
Yes. Okay. Well, we talked about the strength in gold and gold miners. Let's take a look at one name in that gold miner group, which is now ranked number 2 out of the 197 groups that we track, Justin. Shares up about 5.9% today, breaking out in an impressive way. We covered this on IBD Live this morning. And as you mentioned, it was the stock of the day today.
Yeah, our very own Juan Carlos Arencibia was the author of that stock market, the stock of the day today. So yeah, his retirement is doing very odd things because he's writing some great stories for us in his retirement. But look, a very strong action here, and again, one of those where it was closing at the top of its range at the peak today. So never really, gave any indication of weakness throughout the day, even when the market got stronger. So this is something that, look, it shouldn't be ignored when you see that kind of strength. When you see, just to kind of go back to GLD, another thing we were talking about on the show on IBD Live today was Scott's point of how he looked at this as being climactic action, but now it's back on his radar, because okay, you assume after a climax that something is really going to get
Break.
decimated,
Yeah.
and the fact that this got support where it did and is bouncing from there, it means you have to kind of change your mindset. That doesn't mean that this still can't go down, but you do kind of change your mindset and say, okay, well, maybe there is something else going on here. And
Mhm.
this is where the charts can tell us a lot more sometimes than even our macroeconomic analysis. So while I don't have a position in gold anymore, I've been kind of dabbling with it. I was actually at Costco and was even considering the gold bars. I was telling my wife about that, and she's like, "Well, what are we going to do with a gold bar?" I'm like, "I don't know, just to have it." So yeah, at this point, these are things that are still looking very strong. They're trending nicely, and I don't think it's time to give up on them yet.
Yeah. A very interesting look to this area of the market once again after just a brief digestion. Okay, let's go to Meta, a mega cap breaking out today. This strengthened throughout the day as well, Justin, and broke out over a 662 and change buy point, shares up 3.6%. So, in terms of mega cap tech exposure, Meta offering a chance.
Yeah, and I do have a position in this, as I mentioned. This is something where you got that right hand side. You see how it was just coming down on the left hand side, and usually you do like some symmetry. But if I'm gonna not have symmetry, I'm gonna prefer for the right hand side to be so much stronger than the left hand side was in terms of its weakness.
Mhm.
And not only that, but we got another thing that I really like in the fact that we were coming up so strong and then we paused. So again, the pause that we've seen in the markets the last couple weeks is building exactly these kind of handles that's giving us new opportunities for some stocks that were running up very quickly. And look, this is still above its 21 day, it's above its 10 day, it's above its 50 day, it's above its 200 day. So it's above all of those levels. Probably could have been entered into early with a break of the downtrend if you'd gone a little bit steeper there. But the
Oh,
fact that you are now crossing the high of that handle, the traditional buy point, you get a little bit more conviction that this is something that is really showing some power. And although the volume wasn't above average, that's still some pretty nice spikes between last Friday and today.
yes, indeed. Let's round things out with a look at NRG in the utility diversified group. We noted the powerful move on earnings, Justin, not all too long ago. Shares up 26% on the day, 512. And look how tight that this stock has gone after that huge move, just really not wanting to give anything back.
That's couldn't say it better myself. That's exactly what attracted me to this. When you have something that gets, so far out of there on its earnings, like NRG did, that you wouldn't be foolish to just kind of say, "Oh, I think that maybe I need a pause here and just wait and see what happens for the next couple days." It was up 26%. It's a little bit tough to say, "Okay, where would I cut my loss if it came down to the low of that gap up, or would you let it come into the gap up, or would you let it go down to the 21-day moving average line, which at the time of the earnings was 33% away. So that's kind of a little bit too
Yeah.
far. But now what we've gotten a stock that has digested those gains again over the last couple weeks as the market has taken its pause. This has taken a pause. Now it's let that 21-day moving average line catch up to it. And instead of being 33% extended from that line, it's now only 9% extended. So you've got a easier way to kind of manage your risk. You can use that 150 level, and you're not going to be risking too much on this stock as opposed to when you were looking at it on the earnings announcement. So this has now gotten you a way to really manage your risk. It's shown itself to be strong. It's shown that the investors are very comfortable with this higher valuation above 150, and there really isn't much selling to be had here.
Yeah. And what we do know is that the artificial intelligence theme is back and a lot of energy demands go along with that. So a number of utility stocks have been popping back up on our radar, and NRG definitely one of them.
Absolutely. And one of the ways that we've been playing that on Swing Trader is with UTES. We did take some profits into strength on this one previously, and we were actually adding back to this one today.
Nice. That is the UTES ETF. All right. Well, thank you so much as always, Justin. Always a pleasure getting to hear your thoughts.
Thank you.
And thanks everyone for tuning in. That is it from us for today from here, but it is the first Monday of the new month. So that means it's time for our monthly market report with hedge fund manager Jim Ropel. I'm really looking forward to speaking with Jim today live at 5 p.m. Eastern on our YouTube channel. So make sure you tune into that. Really looking forward to getting his thoughts. I mean, last month he said, hey, it looks like we could be getting a lockout rally. Kind of looks like that's what happened over the last month. So I'm really excited to get his updated perspective on the market action, catalysts he's looking at, and of course, top stocks on his watch list. So we will see you there live at 5 p.m. Eastern on our YouTube channel. And then, of course, we'll catch you in the morning on IBD Live, investors.com/IBD Live for all the details. See you there. And then we'll see you back here tomorrow, everyone. Thanks so much.